Hey traders, welcome to Charts and Coffee. Happy Tuesday, everybody. Great to see everyone. All right, so let's make a quick pit stop at the economic calendar over at Forex Factory. Good morning, good morning. Good to see you all. As always, get your questions in. We'll be taking them one by one as we go through our show. So starting off with December 14th. This is what we're going to be dealing with. But remember, we think about what happened before today, especially if it was something that happened in the Asian session that could affect risk appetite. But we also want to look ahead, right? And so, yes, we've had the PPI. We'll talk about that reaction in a moment. And then we go into tomorrow, right? Core retail sales. Who cares? We've got FOMC tomorrow at 2 p.m. for the statement, and then the presser begins at 2:30. So much of what the market is going to discount today has to do with how, especially in the latter half of today, how do traders and investors want to position in front of whatever it is that Powell is going to be saying? Are we going to see that timeline to rate hikes shortened even more? Are we going to see a higher probability of that June hike move to May? I mean, these are the kind of things that will make the middle of this month difficult to look at to Wednesday. So we have this whole psychology to 2 p.m. tomorrow and after 2 p.m. tomorrow, which is why intraday trading these past few, well, really the last week or so has been so helpful to not have to have a trade's success hinge on getting this conversation, getting this tone right as we go into tomorrow's FOMC. All right, so with that being said, the show is about your questions, and let's kick it off with the first one that we have here. Battlehawk asks, could today be the day to enter XLY? Battlehawk, there's a bunch of things that I think in the volatility of the last couple of weeks that have been on my radar: ITB, XHB, XLK, SMH. And I'd say below that list I start to look at things like XLF, XLV, and to your question, XLY. Here is what I like about it. Right back at the 55. We've got a 55 propulsion in the Darvis sitting at support, basically between, as you can see here, about 199 and call it 197 and a half. That's great. No, largely, we're still operating with the bullish bias that preceded the chop that we're in now. However, 2 p.m. tomorrow doesn't give a rip about technicals, doesn't give a rip about price patterns, nothing. It becomes the only avenue that we're all going to be traveling down is, what did Powell say and how did he say it? So that's the risk. What is that perception of what they're going to communicate tomorrow? How does that presser go? And that's really where the risk comes in. I don't want to get so blinded to the secret squiggles. I love my indicators. I love what they communicate about the market to me, but to ignore that Powell is basically going to determine the volatility and the direction, at least near term, at a very specific time tomorrow, is what makes this tricky. So if you have a higher risk tolerance, so you go into options with the XLY with an expectation of risking probably in the vicinity of about 40% of premium paid, you could probably navigate this. And this is the kind of stuff that we're going to be going through tomorrow when I'm with you all in the Sector Secrets Mastery Room. We'll be together from 9:30 to 11. And it's definitely not too late to come join us. We're going to be talking about what kind of setups and how do we want to handle the volatility in front of the FOMC. So XLY is an absolute yes, but not greater than trending markets. So thanks for the question. DJ asks, I love your presentations. Oh gosh, I feel like John Madden on an espresso when I squiggle up the charts. what do I use? This is a piece of software called Camtasia. Is what I use to basically to mark up the charts, DJ. And by the way, I recommend to our members, the rooms that I'm in, download things like a screen capture, screen sh- uh, screenshot, screen share, whatever you want to call it, where you can take a picture of a chart, annotate it, and keep it for yourself. That is the modern day trading journal, right? I don't need to sit around going, Dear Diary, this is what I see on the chart. Take a snapshot of it. I've got hundreds, if not thousands of snapshots. One, because I do them for the mastery, and two, I do them for myself. So thanks for the question. All right, next up. Good morning. Good morning. Let's see. Hey there, AJ. Would I be looking at getting into financial sector trades before the FOMC? So the answer, AJ, is kind of the same answer that I gave Battlehawk about the XLY, which is if I can tolerate the volatility. I think when it comes to XLF, and you might dig yesterday's, if you haven't checked it out, I think you'll really like yesterday's free video that's over at the Simpler Trading YouTube channel, where I talked about certain retracements that may make sense in the context of CHOP that would allow us to essentially, I don't want to say front run, but at least look at something a little bit more aggro. So I want to get down to this area, ideally. I don't know that we're going to get down there again, right? Here's a volume ledge. Here's the point of control, right? So, what I want to then remember in that regard is, let's go over here. I've got a low, and this is exactly what I did in the free video. I've got a low here. I've got a high up here. Okay, this is not high level fib work, and I'm not even pretending that that's what I do. But what we want to do is ask ourselves that move, what are the 382, 50%, and 618% retracements of what I call a last major move? What was the most recent significant rally or decline? And just as we would use Fibonacci to measure those expansions and contractions, this is just one of those expansions that we're looking at. If it were to trace its steps, what are those levels? And I think a 50% could be very, very powerful there. So that's the way I would look at that. I hope that makes sense. Now, what about Bro? Gosh, great trend. Bro's going to be a low weighted, and I don't even know where Bro is within the XLF or within any of the financials for that matter. I'd have to take a look. I can't think about where it is off the top of my head. But, I think in light of your question, CME's on my radar. Yeah, 100%. CME is on my radar. And I would love to get a pullback buy in something like this. Bro is probably going to tie you a little bit closer, though, to the KIE. All right. So Bro is definitely a relative outperformer, but I think Bro is more of a KIE, which for those of you that may not be familiar with it, this is a non-high concentration weighted ETF reflecting the insurance, as you can see there, your insurance niche, your insurance sector. All right. So thanks for the question. Any thoughts on a new day trading class? Oh gosh, Michael, I'll tell you what, we did one in 2020, which was fantastic. We did another one last year. I think Trish really pulled out all the stops with what was, it was a twist on this new one. How do you use the daily in a more effective way as a day trader? And for those of you that were in the, I guess the day trading room and the Sector Secrets Mastery yesterday, we dove into quite a bit of this. What is the importance of key measurements using the daily candle to an intraday trader? And then next year, oh gosh, I don't want to reveal too much, but Yeah, we've got plans for a day trading class, and I'll tell you this much: it's going to be again, what is the focal point, and what do I think is going to be something we will need in 2022? Volatility. We're going to do that deep dive on volatility. We've done a deep dive on volume. We've done a deep dive on different measurements of understanding sentiment via the daily, and I think next year will be volatility. So super stoked for that. But I think um, that's a topic that's always going to be, I think, important, because even if you don't want to be a day trader, having that gear to shift into, it's like having four-wheel drive, right? You don't always want to use it, but when you can, it's great to know that you can shift into four-wheel or all-wheel drive on your car. And that's kind of the way that I look at traders who are able to embrace multiple time frames and multiple time horizons. So I appreciate the question. What are my thoughts on the RTY? Oh, wow. Well, first of all, take a Dramamine. That's the first thing. So I'm going to go right back to the pieces that are on the, I'm going to play the pieces on the board, so to speak. Neutral market. Neutral market. That yellow. If this goes double red, I will have a completely different conversation. But for now, it's neutral. We bought this area before. Actually, we bought this area before. We'll probably look to do it again. It's quite literally going to be an oversold fade, and we'll look for another retracement of the last major move. Would I like to see this get to about? Well, let's do this right now. It's about what you're looking at there. And we fell shy of it. We might have to respect the wave as dynamic resistance. It did a pretty good job before. So when people ask, do you want to short the Russell? Yeah, from higher. People ask me, do you want to buy the Russell? I'll say, yeah, from lower. And this goes back to, in a non-trending environment, you can make an argument for either side of the trade. You can make an argument for the long side of the trade. You can make an argument for the short side of the trade. Where is price at is going to dictate which one of them you're closer to. And dear old man, with that being said, we're closing in on that oversold buy once again. All right. So hope that makes sense. All right. What about the Fang and Deer? Sure. FANG, I would fade this. I would definitely look for a buy. By the way, technobabble alert. What is fade? Fade is the lingo that we use when a market is one that we would look for bearish momentum, but look to buy at a level of support. We're looking for bullish momentum, and we're looking to short at a level of resistance. When I say fade, really what's wrapped up in that technobabble is, can I get some bearish momentum? And where is the floor that I want to buy? That's what I would look for in this case. JAS, JAS, yeah, that's what I would look for in this case. A fade buy, likely in the area between the 55 propulsion and the Darvis levels. Got two nice Darvis levels right around 102.20. All right. Next is, here we go. Next is Deer. When I look at this chop, Jas, when I look at this chop, it kind of reminds me of, the question earlier about the day trading. So there's probably, especially in chop, see all this? And then to understand the volatility here, structure, support, resistance, right? The closer I get to the 200, Jas, it's a buy. It's a fade buy. I mean, bam, bam. Yeah, we're going to do it again, if we can get down there. But in the meanwhile, if you shorten your time frame and you're able to embrace the volatility, right, which, again, is what I get so excited about when I know that there may not be session. So here's one way to look at it. If you have a non-trending market and you know that the continuity of a certain sentiment and momentum may not be there, in other words, follow through, right? And you say, look, I know there's chop here, but there's definitely volatility. But I don't want to presume that I know that we're going to continue doing that tomorrow. and the day after, and the day after, and the day after, which is really what is the fuel behind a trend trading trade. But when you don't have that, you shorten the time frame until you get down to boom, that area there. Okay. So I hope that makes sense. And that's the way I juxtapose. I think everyone out there should have a longer time frame, time horizon approach, and then a shorter term time frame time. And that's going to give you that nimbleness. My golfers, you know this. You need a short game, you need a long game. Right? You can't just, you just can't smash it off the tee. Not everything's a par five, right? So you just can't smash it off the tee. You also want to be able to, you need those different. That's the way trading is. You need that ability to manage those different distances with skill. So love the questions, by the way. All right, SMH. Is it in the buy zone? Jalen. Ooh, yeah, we're definitely. So here's a really important distinction. Look at the way that we pulled back last time. I know past performance does not indicate future results. We know that, right? That's the disclaimer on everything. And that's true, by the way. That's just not legal babble. That's true. But I don't want to confuse it what I'm about to say here. Past behavior in terms of the market does give you a huge bit of probability clarity for the way in which you might want to treat, in this case, the next pullback. If my last pullback went all the way down through the wave, I'm probably thinking this upper half of the wave between the top line and the middle line is fairly aggro. And then the middle line to the lower line is really where I want to be from a conservative level. This is why we have always advocated and taught traders how to scale in and to scale out. It's a dying art. You read books that were written in, 20, 30, 40 years, forget 20, 30, 40 years ago. This was common practice. And then somehow or other, it became, kind of shove all your chips to the middle of the table and have a very binary trade. That's not the way the people that I studied and my mentors taught me. And that's not the way that I teach it either. Scaling in means that's aggressive, that's moderate, that's conservative. And in this trio of entries, you have a budget, right? And so as we sink further and further into the range, yeah, you're gonna I don't want to say add, because I actually hate that terminology, but you have predetermined levels, and you're going to continue to scale in, scale in, scale in until your position or your budget is spent, right? So yes, on that, and then a little bit of what I'll be looking for, what I'll be looking to do. What about Microsoft? Look, as long as XLK is taking the elevator up, I think Microsoft benefits from that. When XLK takes the elevator down, I'm looking for three things. One, can I get in on Microsoft? Because it's likely going to move with that tide, known as the XLK. Two, can I get in on Parabolic Apple? Still not close enough. And three, can I just jump in to the XLK where I'm able to take advantage of Apple and Microsoft? So those are the three things that I'm looking at. If we can get some weakness, I want to buy Microsoft, not because it's the best looking stock within the XLK. It definitely is not. It definitely is not. But because if the XLK is one of the strongest corners of tech, and that tide is a rising tide, it's going to take boats, even ships. That's a big boat in terms of weighting within the XLK. It's going to take ships like Apple and Microsoft with it. But, remember, we've got NVIDIA part of this conversation. Probably not as keen on jumping into that today. We need a minor lower and inside day. Please don't go jumping out in front of this freight train. There's probably going to be a buy there, but not yet. We don't want to play Visa, right? So you have to be discerning. And that's one thing we're going to be talking a lot about in these coming weeks when I see you all in the chat rooms, which is the way that we trade December. And look, November was hard, right? If you had a great November, my hat's off to you. It was a transitional month, and December we're still waiting for the dust to settle and the FOMC to do whatever it is they're going to do next. But I think the second half of December, as we go into the end of the year, is probably going to be about as a good 2 weeks as we've seen in the last month and a half. So I'm looking very forward to that. But we don't want to look for sector rotation. We don't want to go bottom picking and bargain hunting. So we'll definitely talk more about that in the free videos. So if you're not checking out those free videos we put out each day here at Simpler, please do. Yesterday's free videos, I discussed basically Powell versus Santa. And I think Danielle had a video on NVIDIA and AMD. So check it out at the Simpler Trading YouTube channel. Check out those videos, as well as all the previous episodes of, I wish I would have called it Caffeinate and Dominate. Maybe we'll call the podcast the Caffeinate and Dominate podcast. Little Trishism there. But anyways, you can check out all the old episodes of Charts and Coffee. And as always, thanks for joining us. We'll see you mañana, same time, same station. Be good to each other, gang. I'll see you all shortly in the Futures Room.